First of all, we have to understand that the Sharia compliant investment universe of about $55 billion in terms of packaged or vehicles, these are mainly concentrated in equities, and from there on there are other asset classes such as real estate. We have to some extent a few sukuk funds which have emerged on the market. We also have trade finance funds. One of the largest trade finance funds comes from NCB Capital, which has about $5 billion in one fund, which is focused on trade finance. We have commodity funds to some extent. And we have, of course, certain income generating funds. Now, in terms of the largest Sharia compliant domestic fund industry, we have that in Malaysia, which is consisting of many, many funds spread across a number of asset classes, which include real estate, commodities, trade finance, etc., and sukuk funds. In the international Sharia compliant funds universe, the funds are largely focused on equities, and within equities, we are talking about global equities, we're talking about US equities, we're talking about European equities, and we're talking about emerging markets equities. So equities themselves is not a homogeneous class. There are different funds catering for different regions or markets or geography. I think that this is overall where we are in terms of the size of the industry. One thing which is important to note, that the Sharia compliant or the asset management industry is to some extent fragmented. What do I mean by fragmented? That there is a concentration of funds, as I mentioned in my earlier remarks, between Saudi Arabia representing $22 billion and Malaysia representing $5 billion. But there are only about 20 to 25 funds with individual fund assets exceeding $500 million. That means that out of the 700 funds, only 25 funds have assets north of $500 million, and the other funds, 700 minus 25, have assets well below $100 million. So those are not, those funds are, we have many of them, but the volume of assets and hence economies of scale and therefore the relative cost of those funds is much more than a conventional fund which could have something in the order of, at least $1 billion upwards if you're talking about a US fund manager. And if you're talking about managers like Fidelity, one fund could have billions and billions of dollars. So I think that that is one significant difference. The other challenge what this fund management industry has, which means the Sharia compliant, is cross-border distribution. What do I mean by that? Cross-border distribution means that at the moment, the fund promoters from Saudi Arabia are largely distributing funds within their national market. Very few of these fund promoters are actually going outside of their territory to offer their products to other financial institutions, even within the Middle East region, or in the MENA region, which is Middle East, North Africa, or, for example, to markets like Malaysia. One of the reasons for this break is that very few Islamic financial institutions have what we call the regional or global reach. There are international financial institutions like HSBC or Standard Chartered Bank, who of course by their very nature have a global proposition, and therefore if they are offering Sharia compliant investments as part of their window license approach, they're able to offer a global platform for these products. And that, I think, is another reason for the industry, which stands at $55 billion, that unless it goes abroad into Europe, which is one of the biggest markets, if you take European community, it consists of 530 million individuals living in this European community made up of 27 markets. And at the moment, Islamic finance is in its infancy, whether we take the United Kingdom, in terms of asset management and wealth management we are referring to, or whether we take France, which is one of the biggest economies in Europe, or whether we take Germany as an example. And I think that that is where Islamic finance has to make its penetration in terms of the wealth management solutions and in terms of the investments which can be offered to the individual and, let's not forget, the small to medium-sized enterprises, which are referred to as SMEs. So I think that all that is going to be some of the challenges how this industry can expand. I think this is, again, a very good question. It's more linked to product innovation in the world of Sharia-compliant wealth management. I mean, the hedge fund industry, as we all know in the conventional world, is somewhere north of $1.7 trillion. And it has again rebounded after the global crisis. And the industry is growing at a fast clip. The Islamic hedge fund industry is in its infancy. There are very few funds available at the moment. The hedge fund industry, as you all know, offer actually different strategies. We have macro global, we have market neutral, we have long short equity funds, and there are roughly a broad variety of about 14 different hedge fund strategies as a minimum. In the case of Islamic equity hedge funds, what we have seen in terms of product innovation is a few equity long short equity hedge funds. What does that mean? Long means you're simply buying the stocks and holding them and then disposing of them when you think there's an opportunity to make money. Short is that you're buying a stock in the hope that the price will fall below and therefore you will make a profit. Now that means basically you're buying a commodity that you don't own, or you're buying a security rather, not a commodity. You're buying a security that you don't own today. There the Sharia scholars have different views, and even some enlightened Sharia scholars who have given their approval to the equity long short hedge fund Islamic. The problem has been raising assets for these funds because certain investors are not quite convinced that these Sharia compliant equity long short funds, hedge funds, are actually acceptable to them from their point of view. So I think one thing is the supply side, where you can maybe create a product. The other one is to be able to convince the investors that this product actually meets their Sharia principles and is acceptable to them. So I think that is why we at the moment haven't seen a major takeoff of the Sharia compliant or Islamic hedge funds, which are very few, and in terms of assets, they are very, very limited at the moment. Direct real estate funds are about investing in the tangible asset, which could be commercial real estate or residential real estate. For example, we have seen a number of financial institutions from the Gulf region coming into Europe, notably France and the UK, buying property, which means largely commercial properties, and these are actually funded from a real estate fund. So this is what we call direct investments. The other aspect is what we call a real estate investment trust, which the Western world calls REITs, R-E-I-T-S, which is the acronym. Now, these vehicles are not investing in tangible real estate. They are buying shares of property companies or real estate companies. So basically one is, which is REITs, is actually an investment in the shares of the property companies. And the other one, which is direct real estate investment, is investing in real estate, commercial estate. This could be a supermarket, it could be a major condominium which has been built. And just to name a few financial institutions out of the Gulf, one of the leading players is Kuwait Finance House, which is invested in real estate, Sharia compliant fashion. There is the Qatar Islamic Bank, which is out of Qatar, which is also actually invested in real estate in certain geographies. And I think these are just some of the few financial institutions. There are also financial institutions which are into the world of private equity, Sharia compliant, and they're also investing in some cases into real estate. So I think overall, because real estate has an income producing characteristic, because if you have commercial real estate and you're talking about a major like Westfields, which is a major project in London, and if this was partly financed through Sharia compliant financing, then you would have a real estate fund from the Middle East region taking a stake in one of these major developments like they've done in Malaysia. And Kuwait Finance House has been one of the leaders in Malaysia in investing not only in commercial real estate, but in other real estate and infrastructure projects, whether it be for building airports or for building a port or an aluminium plant or a refinery. So I think overall, those are the two major differences between direct real estate investment and REITs, which is the buying of shares in property companies.